through one of the most common trading strategies that there are in technical analysis, and that is trading the pin bar. So I just wanted to run through some of the characteristics of trading the pin bar. The first thing to say is I don't believe that you should just trade purely on a technical basis. You always want to have a sentiment or fundamental reason for taking your trade. So assuming you have a sentiment reasons to take your trade, let me just outline some of the characteristics of the pin bars which are more likely to work out than others. The first thing is you want to get a pin bar that's going with the trend. So here on the Euro US dollar daily time frame, we can see that once this low at the 1.2200 handle was broken, okay, we can see that price was in a very steep downtrend. There was a good fundamental reason for that, and so we were looking for a pin bar that would be with that daily trend. And the first sort of pin bar that we saw this slightly retrace, and we see a pin bar here. Now, there's a number of factors that had made this pin bar a good one. First of all, there were some good fundamental reasons in the market for the pin bar. The second factor going for it is that it's with the trend. Okay. The third thing, the close of the bar was in the direction of the trade that we wanted to go. So in other words, it's a bearish pin bar, and you can see there the pin bar has a bearish close. And that bearish close means that the pin bar is likely to be a more reliable signal than if it was a bullish close. The next thing, we can see that the tail is sticking out, and there is some space to the left-hand side of the tail. Okay, so it's not happening in the middle of a range. There's a pullback. Okay, it's a slight pullback, but there's a number of different factors going for it, which we'll go through, you'll see by the end. But there is space to the left-hand side of the tail, so you want to look for that space. Ideally, you want a large tail. That tail's slightly smaller, but there is a tail on it. It's quite a big tail, and you want the tail to be, at least sort of 3/4 the size of the body of the pin bar, the candle. Okay, so this is clearly the case. That tail is about 4/5 the body of the actual candle. You also want the close of the candlestick to be within the range of the preceding candle. Can you see that? Can you see that the body of the pin bar has closed within the range? And the next thing you want to look at, are there any key factors of confluence? And here there's a very big confluence factor, which is that price is rejecting the 200 exponential moving average. Okay, so you put that all together, you can see there's good fundamental reasons for the trade, number one. Number two, the pin bar has occurred with the trend. Number three, we can see that there is a tail with some space to the left-hand side. Number four, we can see that the pin bar has closed in direction of the trade. And finally, we can see that the trade has some confluence factors. In other words, there's some supporting factors, which in this case is rejecting the 200 exponential moving average. Okay, so you want to be careful of taking any kind of pin bar just because it's, you just see a pin bar. So you see down here, okay, this pin bar it could be not a pin bar really, because look, the close is not at the top of the candle. It's the body is a funny looking body shape, and it's against the trend, so it's much less likelihood of these kind of pin bars working out. Whereas if you look over here, we can see, okay, that's a slightly better pin bar there. We can see, look, it's with the trend. It's at this top of this kind of 1.1800 range, and again rejecting the 200 exponential moving average. Similarly here, you have a down smooth, and if we draw a fib retracement on that, we'll see that we can see that candle, okay, it's in direction of the preceding trend. We can see it's rejecting the 50% Fibonacci retracement. You can see that the close is within the body of the previous candle. We can also see that the close is in the direction of the trade. We can see that it has a large tail, and there's a little bit of space over here to the left, and then price went nicely down to the downside. Very similar situation with this pin bar here, although you can see that the direction of the pin bar, it's a bullish candle, when ideally it would be a bearish candle. That's the kind of setups you want. So that's what you need to look at for your pin bars. Some of those factors that I've mentioned, but again, don't just take them as it were willy-nilly. Look for candles, look for pin bars that have a good sentiment and fundamental reason behind them for the best chance of them working out for you. Okay, obviously, and your stops are above the high, and you can take profit at least 1 times the distance of your stop. That's the best way to play that. And if you enter in at the close of the candle, then you know you're going to get in. You're not going to get, you might want to enter at 50% retracement of the candle. Sometimes you're going to get a fill and sometimes you're not. Okay then, guys. Thanks then. Bye.